I'm going to now request at this juncture Mckinsey & Company for a presentation that captures an overview of the industry. Let me take the privilege of introducing our next speaker. We have with us Shri Rennie Thomas, Senior Partner, Mckinsey & Company. And based in the Mumbai office of Mckinsey & Company, he leads McKinsey's digital and analytics capability for banking in Asia. Over the last 20 years, he has worked with over 25 leading financial institutions. He has led the future of banking research in Asia and has been part of the global team at McKinsey on this topic. Additionally, he's been at the center of innovations in mass market banking and has also pioneered disruptive business models in banking in Asia. I will now request him to please present to this very august audience. Ladies and gentlemen, please help me welcome Shri Rennie Thomas.
Thank you very much and good morning. Mr. Rajiv Kumar, Secretary DFS, Mr. Mustafa, Chairman and Managing Director of SIDBI, Mr. Ajay Kumar, Mr. Gavin, and Mr. Junaid Ahmed, members of the audience. It's a real pleasure to be here today to have this discussion on this very critical topic. I'll start by saying that this event and this discussion that we have here is very critical, not just in terms of the economy of India, the progress of India, but also it represents a real business opportunity for those actually who can actually intermediate in this opportunity appropriately. In this presentation, I hope to actually share some of these ideas and thoughts which sets up some of our panels and further discussions. So I'll cover this in three parts. The first part is around mass market banking being a significant opportunity. It's an opportunity that has existed for many decades, but has not been realized. But the big disruptions, thanks to a lot of what's happening in the infrastructure in India today, is making it real. The second, to give us some inspiration, I'm also going to take a few examples from across the world, emerging markets, to actually look at what's been happening in this space. And finally, some thoughts on what can be done in India. I think we're very blessed with what's happening with the data environment, with the infrastructure regulations. In many ways, this is the moment where we can create new disruptive models which will actually increase the penetration of financial services in this segment. Now, one of the things is a few quick numbers before we get started. The first thing is just the lack of penetration across districts. Today, while the MFI segment has grown very rapidly, just 200, a third of the districts account for about 85% of the MFI lending. One of the big questions here is, can we really broad base this and broaden this? That's itself a tremendous opportunity. Second, as last measured, but as per latest numbers, is a 1.4 lakh crore portfolio. The question is, can we get to 10 lakh crore portfolio? When do we get to actually a 10 lakh crore portfolio? This is actually a significant growth opportunity. The third, there's still about 190 odd million people who are unbanked. How do we serve them? And finally, India is driven by SMEs and micro SMEs. There are about 58.5 million micro enterprises in India. How do we extend finance to all of them? Some things for reflection. Let me start with probably a quick definition of what we refer to when we talk of mass market banking. On the left-hand side of this page, you see this triangle. The vertical axis of the triangle is the income. The left-hand side is on the businesses. The right-hand side is on the individuals. So the mass market starts right above the subsistence part of the population and goes all the way up to what we call as mass affluent. That is this income segment where people have discretionary savings. And that's the point where people are able to make choices on financial services. So in the mass market, in many ways, they don't have this discretionary savings available, and that's a big factor when it comes to serving them. On the left-hand side are the businesses, 58.5 million of them, which comprises of businesses all the way from about 4 to 5 lakh rupees of annual turnover to about 1 crore rupees of annual turnover, both the emerging micro and the micro businesses. These businesses in many ways in India provide the bulk of the employment and the economic activity in most parts of the country. If you look at the significance of this segment, about 65% of the households in India form part of this mass market. Now, to recognize what's been going on, I think a lot of you in this room have been driving a lot of innovation and growth in this space. If you look at the microfinance industry itself, it's been growing at a very rapid pace, in excess of 25% over a fairly long period of time. We also look at the micro SMEs. We've seen a significant shift over the last 2-3 years, where the loans to the micro SMEs, particularly businesses with turnover less than 10 lakhs, has been growing in excess of 30%. So there's a market change in terms of, in many ways, focus on these segments. However, the needs of these segments are much broader. There are loans, of course. This is the biggest need in many ways. There's a need for credit. But there are lots of other needs as well. Remittances. Many of them in several parts of the districts of the country are recipients of remittances. There's also long-term savings. One of the very critical things in this segment is to inculcate the discipline of long-term savings, saving small amounts of money every month to actually build up over a 7-8 year period. Protection, this is a segment that actually is highly dependent on income from their household businesses. To actually protection, both of the asset and of people earning that income is actually a critical need. And finally, payments. Very high friction at point of sale. And that's another need that many of these customers have. As an illustration, I've taken 2 specific customer profiles, just to look at the kinds of needs that they have and the kinds of difficulties they go through. On the left is Mahalakshmi from Erode, Tamil Nadu. Her immediate wish is to buy a new TV, needs to invest in medical insurance for her husband, and needs to save over the next 5-10 years for the upcoming wedding of her daughters and the education of her 12-year-old son. So a mix of needs. There's money required in the short term, but there's saving required in the long term for certain predictable events. On the right-hand side is Prem Kumar from Allahabad. He's a small shop owner, owns a 50 square feet shop, and has a customer base which is very loyal. They keep coming to his shop for their daily needs. He has a bank account he uses to transfer money to parents in a village. He has a 12-month loan from MFI. One of the challenges he faces is that the income is unevenly distributed. So there are lots of seasonal peaks. So lots of sale during Diwali. So he needs more financing at that point. Also needs insurance of the inventory. And most of the loans, as we know, are fixed loans, either as an EMI, and therefore doesn't take care of the seasonality. As you think about serving these needs, these customers face a lot of pain points. Firstly, banking hours. This segment lives off the money they earn during the week, or even sometimes what they earn during the day. They cannot go to a bank branch in the working hours. Those are the hours in which they actually earn money. Often they don't have much collateral to offer. The property that they own often doesn't have a clean title, so those documents can't be used for borrowing. And also there's low financial literacy, so they're not able to even calculate the EMI based on the interest they have. Similarly, for Prem Kumar in Ahmedabad, it's difficult to actually deal with the cash. There's no formal documentation of the cash flow, therefore the Kacha invoices become the basis of actually estimating income. And in many ways, most of the formal banking system doesn't actually serve these segments. This is the reality that exists in some parts of the country even today. However, we're in the midst of a major disruption which could change all of this if a critical mass of us here in the room and also others who are actually working in this space make the right moves. Firstly, there's been a lot of stakeholder support for this area. I mean, of course, we know the small finance banks, but there are lots of regulations that are come into play. For example, the outlet regulations of the RBI. If you talked about bank branches historically, you talked about currency chest, a security guard, brick and mortar, very expensive, dedicated infrastructure. Today, the banking outlet regulations, any outlet serving any customer for any need, as long as open 4 hours a day, 5 days a week, can serve customers on all banking needs. This opens up millions of outlets in the country to serve this segment. Second, There's a lot more awareness in customers. There is literacy aided by social media, and this is another medium to actually get customers educated. Third is the emergence of data and digital. What we're finding is the amount of data now available through a richer credit bureau, but also lots of other data, telco data, smartphone data, also digital payment data, is making it possible to assess and make decisions on these customers. And fourth, there are a whole bunch of new set of intermediaries. There are BCs, the alternate platforms. So in many ways, we're in the middle of a major disruption, and which is pretty unique in India. And I think there are few countries of the world where all of this is coming together so quickly in one go. We're also seeing that the customers in these segments are becoming a lot more digitally savvy. I think it's a misnomer to believe that digital is only penetrating the higher income segments. One of our most recent consumer research on the mass market segment, particularly microfinance customers, what we found is about 54% of the mass market customers were either use a digital channel or actually have made payments using digital channels. This 54% is up from just about 26% from 2014. So in about 3 to 4 years, you've had a doubling of the penetration of digital in this segment. This is pretty profound. And these customers are using all kinds of different digital media. And that is actually creating a data footprint. Now let's take another example of today's world. There's a 28-year-old auto rickshaw driver who wants to renovate a home. If you are a financial institution trying to lend and assess whether you should give a loan, the data that you have now available is actually quite mind-boggling. Let's first look at telco data. There are a billion people with mobile phones, so this is available for everyone. There's the average monthly bill, the length and type of calls, the kind of tariff the customers actually took, and the percentage of time in a day where the mobile phone. You can actually identify based on analytics where the customer actually might be living based on where the customer is there most of the time based on the mobile phone location. Second, there's a whole bunch of data in terms of government databases, Vahan, for example. A lot of this information tells you information about customers, kind of where they're located, kinds of vehicles they own. SDKs. So there are lots of applications that are available today, like Truecaller, Creditworthy, and others, which give you a lot of data on the customer. For example, the type of handset owned, location data, social economic data. And finally, fourth category, there's a lot of utility data, bill payment data. A lot of customers are paying bills regularly through, so the quantum of that bill, the quantum of the electricity bill, for example. These are all data today available through the right partnerships, which can allow you to make a lot of decisions on the customer. First, assess the customer, where the customer lives, what the customer's income is, what the customer's stickiness is to a certain product or service. So this data ecosystem is pretty unique in India, and in many ways is important. Now, the last thing I'd mention here is that this is material. The mass market segment is already about 30 to 40% of all retail revenue pools, banking revenue pools, and they're growing at twice the rate of the rest of the market. So in many ways, this is a segment that will offer much, much higher growth to players. And in terms of penetration, if you look at this chart, what we try to do is against each product, put down the level of penetration in terms of high or low. And you'll find lots of products, like for trading, secured loans, MSME unsecured loans, the entire insurance category, lots of vehicle loans, very low levels of penetration in this particular segment. Now, just shifting to get some inspiration from global examples, I'll take 3 specific examples. First is, there are models that actually reinvent how you reach these customers. I'll talk about one of them called Kiva. The second is transforming the operating architecture. We'll talk of one example called BTP and WOW. And third, about how to use alliances and partnerships. So let me take the first one, example of Kiva. What this actually does is has a rating system for field partners. So this basically rates intermediaries who are actually screening each borrower. So depending on how good the rating is, the partner gets more and more, the ability to raise more and more money. All of this information is made public through the Kiva platform, so people can actually choose which partner they want to go with. And the Kiva partner screens based on loan history, village or group reputation, loan purpose. And this allows the model to be scaled across very rapidly while putting the right controls and checks and balances. There are about 3 million of these borrowers, more than $1 billion already raised, and about 97% repayment rate. Another example is in Indonesia of BTP and WOW. This is actually an agent-based banking, where mass market customers can go to the equivalent of a kirana shop and withdraw money or deposit money, but can also do a lot of activities through the mobile phone. And they also use a basic mobile phone which is very low cost and gives them instant real-time updates in terms of any transaction. It has no minimum balance, no monthly fee, and it's fully digital. And at the back of this deposit, they get a line of credit, or what they call as a PICO loan, which allows them to draw down the loan based on their payment and transaction history. There are about 5 million customers, and it was one of the best platforms for mass market banking in the region. The third example I want to talk about is Mshwari. Here, based on the customer's track record on their telecom and the M-Pesa, they give an instant 30-day loans. So the customer can borrow money today and pay back tomorrow or the week after or within the next 30 days. It's low cost, paperless. The line is set up. They can withdraw money, it goes into the bank account, and they can repay from the bank account. Again, there were 22 million customers, 150,000 agents who actually serve these customers. A very successful model. Coming back to India in that context, we are at a point where we have the opportunity to dramatically reduce the cost to serve. We believe about 60 to 80% by leveraging the digital footprint by the agent network. It's also an opportunity to offer the full suite of financial services products, expand the access, and actually provide underwriting very seamlessly. So in many ways, we are at a very unique point. The data available now will actually allow people to get consent through biometrics, Aadhaar for KYC, bureau and other information, surrogate information, mobile information, physical address information. All of this can be done digitally today, which dramatically reduces the cost. I'll close by saying that I guess the conference will focus on the 4 themes: building a resilient business model, using digital analytics to actually really drive efficiency, improve access, and finally serve the missing middle, which is the micro SMEs. I hope this starts a bit of a debate on how tremendous an opportunity this is, and also how much of innovation is possible in this space. Thank you very much.